Good afternoon, and if you're just joining us, my name is Bianca Smith-Meyer. You're watching Politico Live. We've arrived at the final panel, so if you've just joined us, where the hell were you? But otherwise, we've had an amazing 2 days of events here, and we're coming to a fascinating final panel to take us through to the end of our event, sadly. Some people might think that this panel will sound slightly familiar to one that we had with MasterCard earlier today, but I feel that we're going to get into different sides of the debate of fintech and digital currencies and a sort of slightly more nuanced approach of what it is that's happening. Thank you all very much for tuning in online, and thank you for the audience of people here in Paris who still wanted to stick around for this. I'm very honored to finish with you guys. I'm also very honored to have a distinguished panel with me here, also because one of them is dialing in from across the Atlantic, and I fear it's like 6 o'clock in the morning or something. But from America, we have the U.S. Securities and Exchange Commission Head of Strategic Hub of Innovation and Financial Technology, Valerie Szczepanik. Is it 6 o'clock over there, Valerie?
It's 7 a.m., so
well,
okay, it's a little bit later, but thank you for having me.
And thank you for getting up early to be here. We also have from the European Parliament, a member of European Parliament, Stefan Berger from the EPP group. Hi, Stefan. I don't know if you're calling in from Brussels or from Germany.
No, I'm in from Germany, but I hope I can manage it from here too, and I'm looking forward for a very good debate.
So am I. And from Frankfurt, we have Fiona van Echelpoel from the European Central Bank, who is the Deputy Director General for the Department of Market Infrastructure and Payments. How are you doing, Fiona?
Very well, thank you, and good afternoon to all.
Great, thanks so much for being here. I do want to remind people that they can ask questions. It does get a little bit nerdy on this, but we will explain it in a way that is digestible. But if you have questions, then please do come in. I want to jump on Meta or Facebook's failed bid to introduce a payment service called Diem. For those that aren't familiar with this, they launched a project with 25 other tech companies as well as general mainstream companies. But the ones that you might know otherwise are Uber and Spotify, for example, and a crypto exchange called Coinbase. And they launched this crypto asset or cryptocurrency in a bid to eventually develop a payment service for users all over the world that Facebook has at its disposal, which gets close to the 3 billion number. Except about 3 weeks ago, the CEO of Diem announced that he was going to sell its remaining assets, and basically it was going to be no more. And this had actually come after a big backlash from both US and EU policymakers against the project for fear of undermining monetary policy. Now, Stefan Berger, you weren't such big of a fan of Diem to begin with. I mean, you must be very happy and dancing on the grave, no?
So thank you, Berke. No, I'm not dancing on the grave, but of course for me it was a very good headline when I read it, that Facebook sold the whole stuff they developed. And as you can imagine, in my idea, Facebook has almost 2 billion users, and by introducing their own currency, Facebook could gain overnight the power of a central bank, because everybody, and you know the discussion, knows that the reserve would reach huge amounts. And this means if you have such an amount of a reserve and 2 billion users, that you are able to steer demand and supply for a number of people on the globus. So I believe this power should be in the hands of a central bank, and so that was the reason why I took the amendment as a responsible rapporteur, and I ensured that the authorities and especially the ECB should give a binding opinion in an authorization process for a stablecoin.
Just to explain all of that, Stefan, is because we're jumping into all sorts of very specific things, and I'll come back to you so you can finish your point there. But when Stefan is talking about a reserve, part of the technology of this crypto asset, which was called a stablecoin, would actually be pegged or tied to a reserve fund of sorts that would put money into pretty liquid assets that it could then sell so that anyone could get their money back. But the size of this fund for nearly 3 billion people would be of huge amounts, and that had a lot of supervisors very worried. Now, the file that you're talking about that you are the rapporteur for, which is just another fancy Brussels way of saying that you are handling the file through Brussels, is the Markets in Crypto Assets regulation, which is supposed to set safeguards and transparency requirements for these stable coins. And I think I've covered most of it there. You did mention the fact that you had an opinion inside of this bill that you're working on, which would give the ECB basically the power to veto any stable coin they don't like, which we can all maybe think might have been DM's shortfall if it had gone through anyway. But I'm not putting words in anyone's mouth. But you were just going to finish there before I move on to Valerie. So what were you going to say, Stefan, very quickly?
Yeah. Yes, of course. In the end, it is as you described. The ECB has a veto. The ECB has a binding opinion, and then of course everyone can imagine what would happen to a coin like DM. But then we say one last word. In the meanwhile, there are maybe other and new companies which are inventing new coins. But now we have, when we manage it in the trilogue, then we have a legal framework and a good framework in an authorization process, and we can ensure that the monetary stability is not touched.
Great. We'll come to that in a second. Valerie, I just want to move to you. DM actually abandoned its Swiss headquarters last year, seeking, I would imagine, some more friendly regulatory space to come up with its ideas in the US. But it didn't really get that love in America. Can you just explain what it was that the Americans were thinking from a regulatory point of view?
Sure. Thank you for the question. And I just want to start by saying that the views I express here are my own and not necessarily those of anyone I work with at the Commission or any commissioner. I appreciate the question. I think I always look for silver linings, and what the DM Facebook project did was, I think, raise global attention to the issue. A lot of regulators and policymakers around the world kind of sat up and took notice and started focusing on some really important issues, not only in terms of how can we improve our current systems, and in the case of a stable coin, stablecoins today are used primarily for speculative trading, lending and borrowing purposes. But at some point in time, they may be used as a payment system. We just have to keep in mind that when we set up a payment system, we want the public to have confidence in that payment system. And that means, can they trust that there's something behind the system backing the payment itself? So can they redeem what they're holding for one-to-one, for example, for $1? Can they trust that the reserves that back that stable coin are kept in safe, liquid assets such that they can access their cash when they want to? Are the payment rails safe, operable, safe from cybersecurity issues? So there's a number of public policy concerns around setting up new kinds of payment systems. We want to achieve benefits. We want to achieve efficiency, inclusion, and all the things that new technologies are aiming for. But we want to make sure that they're done with guide rails in place so that consumers, users, investors, and markets are protected.
Yeah, thanks for that. Fiona, I'm wondering, from your point of view, what kind of a signal did the backlash against DM say about Europe? I mean, were we far too aggressive? Do we not like innovation?
Oh, I wouldn't say that we don't like innovation, but I would say we were already looking at developments in the payment space even before Facebook announced its intentions with Libra, as it was called initially. We were already conscious of the fact that there were very significant developments on the payments landscape coming from big tech providers in general. And this was a concern for authorities. But I think the fact that an entity like Facebook was coming with a stable coin that had the potential with such a huge user base to reach a critical mass was something that really put the minds, I would say, of the authorities in Europe together, that they focused on the need for a regulation for crypto assets in general. But there's a strong focus in the MiCA regulation on the type of stablecoin initiatives like Facebook was producing. And I believe that what we have in MiCA now, it does strike a balance. It's really looking at the risk side, but there was a conscious effort also not to stifle innovation, and it was the same in the same mindset that drove the Payment Systems Directive as well. It's this balance between risk and innovation that we have to achieve.
Yeah, great. Stefan, I'm going to come back to you here. As Fiona was just mentioning there, it kind of woke people up, Facebook and its plans for DM. I mean, should we actually be thanking Mark Zuckerberg, the CEO of Meta, for actually coming forward with this proposal and waking regulators and supervisors up?
As you said, yes, of course. And the thing that Facebook wants to release this kind of coin is only a signal that we, on the other hand, need something new. At the end of money, we should have a public institution and not a private company. And so it was a wake-up call for Europe, especially a wake-up call for the ECB to develop a new CBDC. Yeah, and if we have a CBDC, maybe a digital euro or whatever, nobody would need DM or something. Nobody needs Tether, nobody needs another thing. And for me, it's better that a public institution releases the stable coins or the coins for the payment or whatever, and not private companies. So in the end, it was a wake-up call for the ECB to fasten the project CBDC.
So when Stefan says CBDC, he means central bank digital currency, which is something that we approached before in the digital euro. And we'll come back to that for a little bit more of an in-depth view from Fiona and the ECB about where they are in developing that. But before we get there, Fiona, I'm going to come back to you because the MiCA regulation that Stefan is handling right now, that focuses on these stable coins that we were saying, that we were talking about. It does not regulate other types of crypto assets like Bitcoin, for example. I mean, should we just leave those other types of crypto assets like Bitcoin alone? I mean, their value is mainly driven by speculation and consumer demand. I mean, is that just a demand that we should let the markets get on with and ignore?
No, I would definitely say that the activity that we see in assets like Bitcoin are at a level that we absolutely cannot ignore them. They're not a threat to financial stability, perhaps at this moment in time, but they're definitely growing in importance. And when it comes to using assets like Bitcoin as a means of payment, we really would not see that they are a feasible instrument in that respect. They're simply too volatile. Going back to MiCA, what you said, Bjarke, indeed, it's difficult to regulate something like a Bitcoin. What you can do, of course, and what MiCA is proposing is to regulate the providers, those who provide services or activities associated with Bitcoin. But still, there are other aspects that are not fully covered for these type of unbacked coins, and other regulations step in, the whole area around anti-money laundering and counter-financing of terrorism. This is taken up in other initiatives, and we really welcome that, because I think everybody has known for many years that there's a lot of illicit activity going on in the likes of Bitcoin and other such crypto assets. And we need to really focus on regulating that, be it in one regulation or another.
Okay, but you don't necessarily feel that we need a separate piece of legislation for Bitcoin and other crypto assets?
No, I think let's say some of the issues that are not directly in MiCA are covered in other regulations or through AFTF as well.
Okay, great.
Guidance.
Thanks for that. Valerie, I want to come back to you. I mean, MiCA, and please do correct me otherwise, is, as far as I know, the first piece of legislation in the world that really tries to put safeguards around crypto assets. Is that a piece of legislation that the US might be interested in adopting?
Yes, I mean, we certainly applaud the efforts of MiCA and the Europeans to create a comprehensive framework. I think MiCA borrows a lot from, traditional kind of market type regulations that we have around the issuance and trading of assets like crypto assets that trade a lot like securities. In the United States, we do have broad principles-based regulations, a framework that's often overlapping and concurrent with other federal regulators like the CFTC and FinCEN and the banking regulators and the states. So we do have a framework in the United States of overlapping jurisdictions that apply to various financial activities. But at the SEC, we have had the benefit of broad principles-based rules that we've been able to apply to most activities in the crypto asset space, including the issuance of crypto assets and the secondary trading. Our chair, Gary Gensler, has indicated his desire to bring even more market protections and a market protection, investor protection overlay to the markets, and we are busy working to do that.
There are, I mean, other potential consumer risks that could come from the crypto space. There's a lot of lending and borrowing, for example. I mean, is the US looking at that?
Absolutely. You put your finger on a huge issue, I think. Some of the crypto platforms, both in the centralized finance space and the decentralized finance space, offer not only trading, but lending and borrowing. And this is where one can put in so-called collateral with either crypto assets like stable coins or other types of crypto assets and use that as collateral to engage in other types of activities like other trading, lending, and borrowing. Oftentimes, these strategies are highly leveraged. Oftentimes, assets are rehypothecated. To the extent that there is leverage, rehypothecation, and interconnectedness among traditional financial institutions, I think you are starting to raise issues of financial stability that we need to be aware of and continuously monitoring.
Stephen, I'm going to come to you. DM may be dead, but in terms of digital wallets, Meta, in other words, the company formerly known as Facebook, which is still a separate product, but Meta is coming up with its own plans for a digital wallet called Novi. Are you worried about that?
No, I'm not worried about it because Novi was strongly connected to DM, and as you said, it's not only about the things from yesterday. We cannot regulate Bitcoin or Ethereum or whatever, but it's all about the upcoming tokenization of assets. And for this new thing, for this tokenization of assets, MiCA is developed and MiCA is designed. And we have a lot of advantages, and of course everybody wants to develop his own wallet. Yes, and this is what I said in the beginning. What we strongly need is a wallet, controlled and supervised wallet released by the ECB, and then we could bring the whole tokenization thing in a process which is not the Wild West. The World Economic Forum expects that in the year 2029, the value of $10 trillion will be tokenized. $10 trillion. And then MiCA change the way the game is played. And when we have an actor like the ECB, we can end the problems mentioned by the ECB, the consumer protection, data protection, liabilities, anti-money laundering, and even environmental considerations.
Yeah.
And so I think it's not about the Novi wallet. It's all about the framework in which the Novi wallet is coming.
Well, I guess that sets my question up perfectly for you, Fiona. I mean, do you think that the ECB needs to create its own digital wallet?
Yeah, maybe before I get to that, I would just like to reassure Stefan and others that we do have possibilities to oversee digital wallets today. We introduced a new framework for payment instruments, schemes and arrangements towards the end of last year. And the arrangements under that framework, really, they target electronic wallets as such. So even if we wouldn't have a digital euro with its own wallet, we would still be able to oversee the wallets that are offered in the private space. But coming back to the digital euro, of course, all these trends with digitalization have captured the minds, as you have noted before, of central bankers. And we have to look at how central bank notes and coins can be valid in a digital environment. And this has led us, of course, to the digital alternative, which is the digital euro. And we are looking at a wallet, and there are many aspects to consider there when it comes to the design, and privacy is one of the aspects that we're looking at amongst many. The security aspect is also there as well. How we manage these type of wallets in terms of the technology around compliance checks. So there are a lot of aspects to be looked at, and we have to take care of this both on the design side and also afterwards on the oversight side.
Okay, so the ECB is looking into creating its own wallet to go along with the digital euro. It's very interesting.
Well, not necessarily its own, but let's say the digital euro has to be compatible with the wallets. Yeah.
Oh, so you're saying that any type of digital euro that's created would only work with a wallet that carries these safeguards?
Let's because I cannot say much about the design yet, because it's not, let's say it's something that we are working on during this investigation phase, and all possibilities remain open. But wallets, insofar as they will be part of the solution, would have to meet certain requirements for sure. Okay,
that's interesting. Now, we very conveniently walked into the debate around the digital euro, otherwise central bank digital currencies, as we'll address the debate right now, because obviously we wouldn't be having a digital euro in the US. There would be a digital dollar, but for those that are just tuning in and don't know what we're talking about, a central bank digital currency is basically the equivalent of a digital version of of a payment note, so a dollar bill or a euro bill or a coin, but just done online and is guaranteed by the central bank. Fiona, the Commission announced this week that they were going to introduce a proposal for a digital euro early next year, and it's done in order to work with the timeline that the ECB is going through, because you guys are in the phase of carrying out in-house experiments on the digital euro. Could you just give us a sense of where you are and what the attempted end date will be for a decision on whether to issue one?
No, thank you for the question. Indeed, we're in a very interesting phase at the moment. We call it the investigation phase. The Governing Council decided last year to start this phase, and by the end of this phase, which comes around October next year, so October 2023, at that stage, a decision would be taken. So although we are doing a lot of work now during this exploratory phase, we're looking at design features, we're looking at the legal tender aspect, which relates to what the Commission announced earlier this week. We're doing, as you said, experiments to see what would be the best approach, also in view of the innovative features that perhaps consumers and societies would expect to see in such a digital currency. So all these things are taking place in a very tight time frame. But we're not working on this alone. We are really engaging with the market participants. We have set up a market advisory group with representatives from the payment sector.
We can hear you, Stefan. Stefan, we can hear you. Just yeah, sorry, Fiona.
Yeah. No, I was just saying that we are not working on the digital euro on our own. We are also engaging with the private sector. We have a market advisory group. We have a Euro Retail Payments Board. So we're really reaching out in a big way to see how to best meet the needs of society if we go ahead with such a digital currency.
Thanks very much. And hopefully Stefan is managing to figure out the situation at home. I'll come to you soon, Stefan. Don't you worry. No worries there. But Fiona, I just I mean, let's not kid around, right? The ECB keeps saying that this is a decision that still has to be made, but we're going to issue a digital euro, right? Like, I mean, it's the most open secret everywhere, isn't it?
It's for the governing council to decide. I really cannot say. Yeah.
Fair enough. Okay, I had to push you in any case. Valerie,
Yeah.
I know that you don't work for the Federal Reserve, so obviously I'm not asking you to tell us what it is that Powell is thinking. But I mean, from your general education and being within an informed space, could you just give us a sense about what it is that the US thinks when it comes to the idea of a digital dollar?
Sure. So in January this year, the Federal Reserve issued a report to examine the benefits and potential benefits of the CBDC. And so it gives a 120-day comment period. It's really the first step, I think, in the U.S. exploring whether or not to issue a CBDC. The report notes that at base, the CBDC would have to offer benefits to consumers and businesses that outweigh risks, that it complement rather than replace existing systems, and that it provides protections for consumer privacy and protections against illicit activity, and have broad support from key stakeholders. So there's a number of features that the report notes that a CBDC should have if one is to be issued, but it doesn't take any kind of position as to whether or not there should be an issuance. Around the same time, the Federal Reserve Bank of Boston, in partnership with MIT in Boston, issued findings on technical research they're doing on a CBDC, including the description of a theoretical CBDC transfer processor that they've developed through open source software. That is called Project Hamilton. It's separate from the Federal Reserve's analysis of whether a CBDC should happen, but it's interesting to watch that project as it progresses as well.
Yeah, thanks. No, one thing that's been interesting from the ECB's experience is that they carried out a consultation that found that privacy was one of the biggest concerns that potential users would have. Now, thankfully, I mean, among many of those recipients who highlighted privacy were Germans, and we have a German on the panel today. So, Stefan, I mean, we all know that Germany loves to have cash. It's still a country that loves cash, walking around with fat wallets. So I'm just wondering, could you just explain to us, like, what is the German phobia about privacy?
Yes, thank you for this question. And maybe I solved my problems here. Yes, in Germany, people are saying a banknote is freedom. And it's freedom printed on paper. And so the EU would need to have similar characteristics. And this is, there are some problems. People see the problem of negative interests, and the worth of money. This is a big thing in Germany, a big historic thing, and so we have the debate that the central bank should ensure that negative interests and negative interests are not combined with the CBDC, and that we need consumer protection against it. And this is one of the most important things in Germany, combined in the debate on the CBDC. And of course, it's in general the freedom debate. Nobody wants to be traced, and people in Germany, we have big debates about data protection and privacy. On the other hand, this is a general problem in the whole digitalization process. But we have this discussion in Germany. It's about data protection, privacy. People do not want to be traced, and it's all about freedom.
So this tracing issue is actually what I'd like to come to a close to on as well. But it's a very interesting one. Politico carried out a poll in the UK, for example, on whether people were concerned about a digital pound. And one of the biggest concerns that people had there was the idea that the government might use this technology in order to snoop on people's or survey people's payments. Valerie, I want to jump to you quickly on this. I mean, is that a concern that has materialized also in the US debate?
Yes, I believe so. If you read the paper that was put out by the Fed, that is an emphasis. Want to make sure that anything developed ensures consumer privacy.
Right, okay. I guess, Fiona, the only question I have for you is, are you planning to snoop on us?
Absolutely not. No, I think the ECB and many senior officials here at the bank have said that there is absolutely no intention on the side of the ECB to monetize the data that would come through the provision of a digital euro. The only aspect that we have to look at when it comes to data, of course, is how to make sure that consumer or customer compliance checks or anti-money laundering requirements and that are taken care of. But on our side, beyond the need to comply with other regulations, there's no intention to use the data associated with any digital euro.
And with that, we've come to the end of the panel. Stefan, Valerie, and Fiona, thank you very much, especially Valerie, who's actually dialed in at 7 o'clock in the morning. I very much appreciate that. That is a wrap. I want to thank you all very much here in Paris and online. We've had some amazing panels and discussions over the past 2 days. We've had commissioners in the House. We've had the French finance minister. We've had a few central bankers. We've also talked about reforming the EU's deficit rules, greenwashing, taxonomy, artificial intelligence, and payments and fintech in the digital euro, as we were just listening to here. I'd like to thank all the speakers for contributing over the next couple of days. I'd also like to lend or extend my thanks to especially our production and events team that helped put this whole thing together. So I'd actually just like everyone to applaud them, given the fact that they did so well. Also, a big thanks to our reporters, Johanna, Hannah, Mate, and our editor, Helen, for helping us take the content and deliver it to everyone. Also would like to thank our two presenting partners, Generali and MasterCard, for making this event possible. We don't have a fixed date for next year's summit, but we will keep you informed on that. Until then, I thank you all very much again. You've been watching Politico Live. I'm Bjarke Smith-Meyer, and I wish you a wonderful weekend. Thank you.